In this video, we're going to talk about how to create a single-step income statement. So a single-step income statement just has one step. We take all the revenues that the firm has, and then we subtract all the expenses that the firm has, and that gives us net income. So that's why we call it single step. There's just one step, just revenues minus expenses equals net income. So let's do an example with an adjusted trial balance, and let's put together a single step income statement. So we've got a company here called Gator World. It's a petting zoo for alligators, and we've got an adjusted trial balance, so we've made all the adjusting journal entries already, and it's as of December 31st, 2018, and we have all these different accounts, and we need to figure out which ones are going to go in our income statement. So we only want revenues and expenses, right? So service revenue, rent revenue, selling expense, cost of goods sold, rent expense, G&A expense, interest expense, depreciation expense, and bad debt expense. All of these accounts are going to go in our income statement. The other accounts, we have cash, receivables, those go on a balance sheet. Those don't belong on the income statement. So let's put together our income statement. So first we're going to say Gator World, which is the name of our company, Gator World, income statement. Sometimes you see it called statement of operations, income statement, and this is going to be for the year ended, 12/31/18. It could have been for a quarter, right? You can make an income statement for a quarter, but we're just going to assume in this example that it was for the year of 2018. We're putting together our income statement for Gator World. So with our single step method, again, all we do is first we say, okay, what are all the revenues? What are all the revenues? So with the revenues, we're going to have, we've got the service revenue and we've got rent revenue. So we'll say service revenue, and then we've got rent. And so those amounts are, we've got $93,000 in service revenue and then $13,000 in rent revenue. The order of these doesn't matter. We're just laundry listing the revenues. And so then the total revenues is going to be $106,000. Now we go on to expenses. So for our expenses, we have selling expense of $23,000. So we've got selling is $23,000. And then we've got cost of goods sold. I'll just abbreviate it as COGS. That's $15,000. And then we have rent expense of $9,000. And then G&A expense, G&A, salaries and so forth, $23,500. Interest expense of $500. Running out of space. Interest expense of $500. Depreciation is $400. Just abbreviate that. And then bad debt. So we've got some bad debt expense of $1,600. Okay. Now our total expenses, if we were to add up all our expenses, we will have $73,000 in expenses. So this is our total expenses, and then at the top we have our total revenues. And so all we do, and this again was where the name single step comes from, we just say, okay, our revenues are $106,000, and we subtract, this is the step, this is the single step, subtract our expenses of $73,000. So that is going to give us net income of $33,000. Again, that's just that $106,000 minus $73,000 is $33,000. Now, in the next video, we're going to talk about how we can put together a multi-step income statement, which is a little more informative, where we break down into operating expenses and different types of expenses. Are they recurring? Are they not recurring? So we can give more information to investors and creditors who are looking at the financial statements. Because if you look at this income statement, It's nice in that it provides the net income, right? So this calculates net income like any other income statement, but it's not very informative. All it tells us is just a laundry list of revenues and a laundry list of expenses. It doesn't tell us how likely any of these revenues or expenses are to recur or happen again in future periods. And that's what we're going to learn with a multi-step income.